All right, guys, welcome back to another video. It's lovely to be here with you on this Saturday afternoon. Another weekly post coming from me right now. Today we're going to be going over crypto and AI, how the global economic news is affecting both of them, and what you guys should be doing right now based on that news. We're going to be going over analysis of a couple major AI stocks like Nvidia and AMD. And we're also going to be going over some analysis on some major cryptocurrencies like Bitcoin, Ethereum, and Solana. So if you guys want to know how this news right now, all the current news and how it's affecting AI and crypto, stick around throughout the video. Let's get into it. All right, guys, so this is the major question. What's actually happening right now? Today, the most current news, Bitcoin's around 63,000, Ethereum's around 2,000, oil's back above 80, which is very concerning in my opinion, and AI stocks have been extremely volatile. They've been up, down, around, and you probably feel like you're on a roller coaster right now if you're holding them. And when to buy as well, we'll get into that later. But here's what's important. All of these stories are actually connected. As unlikely as that seems, they're all connected. Oil affects inflation. Inflation affects rates. Rates affect liquidity. Liquidity affects assets like tech stocks, AI stocks, cryptocurrencies. So today we're going to connect all these dots and look at the biggest AI stocks and crypto, both those sectors, and tell you how the news affects everything. So the biggest macro story, guys, oil and Iran. WTI crude recently moved back up to above $80 a barrel, with the situation surrounding Iran and the Middle East continuing to create uncertainty in energy markets. So why does this matter? Why does this affect AI and crypto? Because higher oil prices can increase transportation and energy costs, which potentially pushes inflation higher. And if inflation stays elevated, the Federal Reserve has less room to aggressively cut rates. As of now, I believe it dropped to about 40% that they're going to hike rates on poly market, but there is almost no percent that they're going to cut rates. Right now, everyone is assuming that they're going to remain the same. That matters because lower rates generally make it easier for money to be liquid, for money to flow into riskier assets like the AI, trades, and cryptocurrency. So the market's essentially asking, will the geopolitical situation push inflation higher, keep it the same, or make it lower if we get good news soon? That could be one of the biggest questions for markets over the next few weeks and even months possibly, because this war's been going on for a long time and we're not really seeing an end to it. So why this matters for AI stocks, guys? Again, AI is obviously a massive long-term trend. I think it'll continue. I think it's bullish, but it doesn't operate independently from the rest of the economy. Data centers require a normal amount of electricity and energy, and companies like Microsoft, Amazon, Google, and Meta are spending billions building the AI infrastructures right now. Higher energy prices can therefore matter in two ways, right? One, we have an increased operating cost. And the second, and probably more importantly, they can keep inflation and interest rates higher. And that means the AI thesis can remain incredibly strong while AI stocks still experience short-term pressure in the downward. That's why I think it's important to separate the company from the stock price and don't only believe what you hear on the news. A great company isn't automatically just a great investment at every valuation, and same thing on the other side. But yeah, guys, let's get into Nvidia and AMD. I told you I'd be doing some analysis on these. So let's start with Nvidia. I'll pull it up here. Nvidia remains the centerpiece of the AI infrastructure, as you can see here, and it's recently closed around 225. The interesting thing is that despite all the bullish AI news, the stock hasn't simply gone straight up, guys. That tells us expectations are extremely high. The question isn't whether AI is real anymore. The question is how much future AI growth is actually priced into these stocks, and will they move higher? Nvidia's upcoming earnings will be especially important because investors will be looking for continued AI demand and whether enormous infrastructure spending is translating into sustained revenue growth, and the stock will continue increasing. And then there's AMD, which I'll pull up here. As you can see, AMD has been one of the strongest AI names recently, closing around 514 after a huge run. And it was falling all the way back down to around last month yeah, guys, again, I pushed her to around 500, guys, and it fell down and increased back up. It was amazing. I got in long on this. If you guys want to keep posted with my trades, I post daily. But yeah, guys, we made some money. It was amazing. But its data center business has been growing rapidly, making it one of NVIDIA's biggest competitors in the AI infrastructure. And that says a lot, guys, because NVIDIA is a huge company. But after such a massive move, expectations are also extremely high for this company. So with both NVIDIA and AMD, I'm watching earnings, valuation, and pricing action all together to see if there's something I want to jump back into. But yeah, guys, the big tech AI players, beyond the chip companies, you've got Microsoft, Amazon, Google, and Meta, right? These companies are spending enormous amounts of money on AI infrastructure. And the next phase of the AI trade is going to be about monetization. Because investors want to know, are these AI investments generating revenue? Are margins holding up? And are companies actually getting a good return on all this capital that they're spending, or is it going to nothing? If the answer remains yes for all these, then the long-term AI story stays strong. And if spending continues exploding without enough revenue growth, then valuations could become bigger. Bigger problem for us here, guys. So keep an eye on that. That's what I've been keeping an eye on this time around, and also the news surrounding these things. Meta still has some stuff going on with the legal lawsuit that they had. Essentially purposefully, I don't know if you guys heard about it, they were purposefully making kids addicted to social media. Pretty insane stuff. I'll update you guys with that lawsuit as time goes on. That's why Meta is struggling the most amongst all the AI tech plays right now. So guys, crypto giant. All right, let's move over to crypto. Bitcoin, I could pull that up here. It's currently around 63,000 and has weakened considerably from the recent high, guys. This is going down and down. It is nothing in sight for this thing reversing yet. Until we can push past that 200 daily moving average. But the interesting thing about this is that it also hasn't gone down. Amongst all the crazy negative news we've got, it hasn't gone down. And to me, that seems bullish, personally. You've got several factors working against you right now, though, like geopolitical uncertainty, elevated oil prices, interest rates, concerns, and regulatory uncertainty, and weaker risk appetites always come with those things, guys. In my opinion, Bitcoin's not even risky. I don't think Ethereum and Solana really are risky for me either, but the general globe may not understand crypto as much as everybody else. So I guess as younger people like me who know this is the future, they're not going to just risk their money in these sorts of assets while oil prices are high and, you know, rate cuts are not happening because it's more risky to them. But I want to make a distinction, okay? A lower Bitcoin price doesn't automatically mean the long-term thesis is broken. It just means the market's currently demanding a higher premium for lower risk assets, like I said. From a technical perspective, I'll show you right here. I'm watching the low $60,000 area very closely, and especially even the higher $50,000 area, like 58 that we tapped. Because if Bitcoin stabilizes and begins making a higher and higher lows, and that would be an encouraging sign to me. But if Bitcoin loses a major support and continues making lower highs and lower lows, I would personally be scared. I would set my take profit right around that $57,000 region, because I think there's going to be a lot of liquidations there. But you don't need to predict the exact bottom. Waiting for the exact bottom is just, you're not going to be able to get it 9 times out of 10. If you think you know the exact bottom, and you just mass into it, you could potentially lose a lot of money. I think it's just a lot easier to not try and catch a falling knife and just DCA into the market, dollar cost averaging, putting the same amount into the market every month or every time it falls a certain amount of money. I just think it's a lot smarter and it'll save you guys a lot in the future. Ask me how I know. I lost a lot of money this year, guys, since October 10th, Black Friday. Love it. If you're new to the space, you won't know about that, but just ask me in the comments down below. I'll explain later. But okay, guys, next, Ethereum and altcoins. This is what I'm most excited about right now. I'll pull it up here. Ethereum is around 1880, while Solana is around the mid-70s, guys. This is really good. All these coins are holding up exactly how they should be. Altcoins are generally higher beta assets than Bitcoin, so the fact that they're holding like this right now is phenomenal. I'm very excited about that. But this means they can outperform dramatically when a risk appetite returns. but they can also fall much harder when investors become defensive like they are right now, which is why I'm personally investing in them. Because if other people don't want to be in it, it probably means someone should start being in it, because the less people in it, the lower the price, and you can get a better price advantage. So I wouldn't look at the altcoins simply because it's down a certain percentage and assume it's cheap. But the better question is, why is it down? Is it following Bitcoin? Is liquidity leaving the entire crypto market, or is it just that asset? Because if stuff is just all leaving at one time, it doesn't mean the asset's bad. It just means the class isn't ready to see that liquidity yet, and that's fine. Or is there a fundamental problem with that specific project, you know? Those are very different situations, like I said. But yeah, guys, let's get into the Clarity Act really quickly. There's been so much news about this. It's been insane. The biggest crypto story right now, I think, and the biggest thing holding crypto back from moving, which to me is ridiculous because I don't think it'll affect Bitcoin anyway. But the legislation could establish much clearer rules around the US digital asset market and help define how different crypto assets are regulated. The Senate process has been delayed, with the next major opportunity now looking more likely to come after the August recess, potentially making September extremely important month, guys. But the thing is, I've heard recently, I've seen online, I've seen videos of it. Altcoin Daily made a video. Shout out to you if you guys want to go watch it. There could be an insider that's essentially saying right now that they are going to release the Clarity Act and it is going to pass. Watch that video. Altcoin Daily is a great video. I won't say too much on this channel. I don't want to steal his thunder. But remember, guys, a delay isn't the same thing as the failure, right? Even if it's next year, there's no reason not to be buying now. If you really think crypto has a future, there's no reason not to be buying now, because it could pass next year. It's not like it's dead. People keep saying it's dead. They do this fear-mongering thing. It's not dead, guys. It'll just be passed next year. The Clarity Act remains an extremely important potential catalyst, but I wouldn't treat passage as guaranteed for this year, like I said. If it moves forward, it could be amazing for crypto, but if it continues to get delayed, I'm probably just going to stop watching it, because it's just, I don't care. I'll update you guys, but it's just ridiculous to me. I don't think it should make that much of an impact. Yeah, guys, when I'm watching an AI right now, my AI watch list, it's basically divided into several groups, right? NVIDIA, AMD, they represent the AI chip plays. I think they're the strongest. I think they're great companies. If they start moving up, I think everything else will. Then you've got companies supplying memory, networking, and power, the semiconductor equipment. And that's important because the AI opportunity is much bigger than just one or two companies. But again, valuations matter. I'm watching bigger tech like Amazon, for example, just had insane earnings, exploded, I think 14% in a day last week, which is just crazy. I'm also watching Meta because that's the worst asset in that class, it seems like. So, but yeah, what should you guys be doing? Don't copy me. This is not financial advice. What should you be doing in this environment, right? Personally, I wouldn't try to predict every headline. You can't predict exactly what's going to happen in Iran. You can't predict the Clarity Act. You can't predict oil prices. You can't predict any of these things. So what do, right? Instead, I'd focus on position sizing, diversification, and confirmations of price action starting to move back up. Right now, we're in a very, very tight liquidity phase. They're not going to be doing rate cuts as far as we can tell right now. Rate hikes, I think, in my opinion, are out of the picture, but they're definitely not going to be doing cuts. So if you're bullish long term, you don't have to put everything in the market at once. You could just DCA. Scaling into positions over time can really, really reduce the pressure and reduce losses if something continues to tumble until we start getting that good news and people start FOMOing into the market and pushing your price higher. If the market confirms a strong uptrend, guys, you can increase exposure later as well. I'd be careful about buying at the top though, because I've done that a couple times. But there's three possible scenarios right now, right? There's the bullish scenario where oil stabilizes, geopolitical tensions stop, the Clarity Act passes, and everything's great, right? There's a sideways situation where oil remains elevated, the Fed stays cautious, AI earnings remain strong, but evaluations limit the upside, and Bitcoin continues trading with this stupid little choppy range it's trading with right now. And the bearish one, guys, is that oil spikes significantly higher, inflation expectations rise, geopolitical tensions worsen, we get into another World War III, and that can create a much larger risk-off move, guys. So watch for these three scenarios because that could tell you a lot about what to do next and how much to be putting in right now. So yeah, guys, my biggest takeaways is that the market isn't necessarily broken. It's extremely complicated right now. There's liquidity coming in and out of altcoins, Ethereum, Bitcoin, AI stocks. People are saying AI is dead. Stuff is crazy right now, guys, but I'm just watching earnings, cash flow, and continuing to justify what I put into the market with actual factual information, guys. It's okay to trade on emotion if you're guessing other people's emotion and trading on that and trying to trade opposite of them and outsmart them, but don't trade on your own emotion, guys. For crypto, I'm watching Bitcoin's ability to hold major support. Same thing for Ethereum and the macro environment. Oil is one of the biggest things to be watching, so watch that price on oil, guys. If it falls, we could be in for a couple rate cuts, late this year, early next year. So yeah, guys, that's my entire market outlook. That's everything I'm doing right now for the next few weeks. Bitcoin's around 63,000, Ethereum's around 1880, oil above 80, Nvidia's around 225, AMD's coming off a massive run. Just a summary of everything there. Yeah, but guys, if you want weekly breakdowns of crypto, AI stocks, macroeconomics, guys, I'm here every week. Post every Saturday, and I post daily as well with the clips, just summarizing everything I said in these videos. And let me know in the comments, are you bullish or bearish right now? What are you investing in? Where's your entries? And do you think AMD or Nvidia are going to be continuing to go higher? Which one do you think is the craziest play you have right now? The most safe play you have right now? And do you think the Clarity Act passed this year? Let me know down below. But yeah, guys, I really appreciate you watching. Thanks for sticking around till the end, and I'll see you in the next video. Peace out.